All right, Monday. We're back, baby. We are back. Let me get situated here. Cheers, by the way, guys. Don't have coffee right now. Still haven't made my coffee today, but we got the water on deck. Cheers. I appreciate you all for tuning in. And let's dive into it. We're going to break down SoFi stock like you guys saw in the title. And we're going to go over the indexes, which, by the way, they're all in the red. We'll break down why they're down, my thoughts, what I'm looking to do, the whole 9 yards, guys. So hit the like button. Do not forget to subscribe. Join the free email stock newsletter. That is linked down below. Check out the Patreon as well if you guys want to keep up with what I'm doing in my portfolio. Down below as well, guys. Linked down below. And now let's dive into it. So it's almost noon on the East Coast, and we're down 1.5% on SoFi stock, trading down 20 cents, $13.70 is where it's at. And every index in the U.S. stock market is in the red as well. The Dow's down 0.05%. The S&P's down 0.25%. QQQ is down just over 0.25%, and the Russell's down 1% roughly, as the VIX is up 6.2%, and we have the metals creeping up as well. Gold's up 1.6, silver's up 0.8%. So we're down on the indexes. VIX is climbing up. Metals are pushing up. SoFi is actually breaking out on the intraday, but it's still down 1.4%. What the heck is going on here, guys? Well, overall, Moody's, that's what's going on. Moody's downgrading the U.S.'s credit rating. We'll talk about that here in a second. Actually, we might as well go into this now, because overall, that's what's really pushing down stocks. Actually, wait, let's break down SoFi for a minute or two quickly. Then we'll talk about Moody's. I don't want to get all over the place in this video. Let's stay on the SoFi topic. Then we'll talk about Moody's. So we're not going back and forth, running all over the place. So SoFi is down about $1 now from where it was last week. We hit about $14.78 last week. I think that was the high from the 14th. I think that was on Wednesday. Now we're at $13.75, so we're down about $1 from that point, about 7-ish%. Not much, but about 7%. And the stock is technically in a downtrend on this 5-day, 5-minute. I mean, look, if I get this channel tool out, we can see clearly we're kind of in this little downtrend. And now, as we're breaking out on the day, still down 1.3% overall, though. But now that we're breaking out from that opening price, which you guys can see here, we hit $13.35 at open. Now we're up 30-40 cents from that point. Now that we're breaking out from open, we're at the top of this channel on this 5-day, 5-minute. This is a big resistance for SoFi. And if I pull up this 30-minute chart, now we're also at the 180 SMA resistance, which we got hit at on Friday. We got rejected there, and we dumped after the bell once we got this Moody's news about them downgrading the U.S.'s credit rating. And on the 1-hour chart, we're still looking pretty decent, right? That's the reality here. We're still technically holding an uptrend, right? The cup and handle still intact that we talked about. So when in doubt, zoom out. SoFi still looks pretty good here on the 4-hour chart as well. Obviously, it looks solid. And this inverse head and shoulders that we outlined in previous videos, this is still intact, which is bullish. So what we just have to do now, which I feel like I've been saying this, but I'll say it again, we just have to break 14.50. And if we take out the highs from last week, man, this could be smooth sailing to the upside from there. But until then, it's trying to figure itself out. That's what we're doing. We've kind of been flat for about 2-3 weeks of trading. I mean, this stock has been, it's bounced around a good amount, in this $2 window from $12.50 to $14.50, but it's kind of been chilling in the mid-13s, for the last couple weeks, give or take a little bit. So let's be patient. Let's wait for this direction. And again, if we start popping $14.50, $15 plus, that's where we could really get the momentum. So Sofi, I like the way it's setting up right now, even though it's down 1.5%. So now let's break down the news, the Moody's news that we got. So let's break this down. And we're a little late on this news. I mean, we got this on Friday. But either way, it sent stocks down after the bell on Friday. And obviously that is, causing stocks to fall today. So if we zoom in a little bit here, investor concerns mounted after the rating agency Moody's slashed the U.S.'s credit rating on Friday, bringing it down one notch from AAA, the highest score, if you guys didn't know, to now AA1. The agency attributed the downgrade to the increasing burden of financing the government's budget deficit, as well as the high cost of rolling over existing debt amid high interest rates. And look at this. This one-notch downgrade on our 21-notch rating scale reflects the increase over more than a decade in government debt and interest payment ratios to levels that are significantly higher than similarly rated sovereigns. So in other words, they said this in a statement. Essentially, why they're notching it down, the U.S. government, is because these ratios are just significantly higher. These ratios, they're higher than other similarly rated sovereigns. So they got to drop the U.S. as well. And I believe there's one agency that hasn't dropped yet, which will, I think it's right here, it says it. Moody's has assigned a country ceiling rating of AAA, to the U.S. since 1949. And to be sure, it's now in line with all major credit rating agencies, which had already given the U.S. their second highest available rating. Actually, no, so I confused that. There's not another agency that has a AAA rating. Moody's was the last agency that had a AAA rating, it seems like here. And now it's in line with all the major credit rating agencies, which had already given the U.S. their second highest available rating. So they were notched down. It looks like they were the only credit rating agency that had the U.S. at AAA still. And this is a major symbolic move, as Moody's, right here, were the last of the major rating agencies to have the U.S. at the top rating. That's what Deutsche Bank analysts said in a note recently. So, I mean, if you guys didn't know, things have been rocky lately. In April, Treasury yields jumped after President Trump implemented the reciprocal tariffs. The 10-year yield moved above 4.5%, and the 30-year hit 5%, causing the Trump administration to back off of the stiffest tariffs on fears that they were causing a financial panic and would raise rates for consumers. But now, following the move by Moody's, the long-term yields have returned to these levels. Think about that, guys. Loans for houses, cars, and credit cards track these rates, which means we might be creeping up again a little bit, right? And Moody's warned about the lack of the country's fiscal restraint in its downgrade. They said successive U.S. administrations and Congress have failed to agree on measures to reverse the trend of large annual fiscal deficits and growing interest costs. We do not believe that material multi-year reductions in mandatory spending and deficits will result from current fiscal proposals under consideration. And they also said, with tax cuts and tariffs hanging in the balance, Moody's appears to be sending a message that it thinks these policy changes will, on net, put the U.S. on an even worse fiscal trajectory, wrote a Bank of America economist. Aditya Bave, I hope I'm definitely butchering their name. But that is, tariff revenues won't fully offset the cost of the proposed tax bill. So the U.S., man, they were once AAA across the board, right? Top-notch credit rating, but that's starting to slip. Yields are coming up. Foreign governments, foreign, countries aren't as Excited to invest in U.S. debt. You know, we're seeing China dumping a bunch of bonds. It's getting real out there, man. It's getting interesting. And now Moody's, again, downgraded the U.S. credit rating, which we'll see how this, what kind of ripple effect this causes, how this will affect things moving forward. But, yeah, that's why we're seeing some pressure in the overall stock market right now, and Sofi as well. But guess what? I am a buyer. I'm still buying stocks, baby. It doesn't matter to me. Moody's can upgrade, downgrade, do whatever they want. I'm still going to be buying stocks every single week. I'm not buying Sofi stock necessarily right now. And mind you, I've bought this stock like a madman over the last year and a half. So I'm not necessarily adding more on this rally we're seeing, but I'm definitely buying overall market ETFs. I'm definitely buying other stocks out there. Every week like clockwork, I'm putting in money. I'm buying stocks. And if you guys want to keep up with what I'm doing, check out the Patreon. I post all my updates there in real time. That's linked down below. And we're investing thousands of dollars a month in that Patreon portfolio, and it's doing well. So if you guys are interested, check that out. Hit the like button on this video, by the way. Make sure to subscribe as well to the channel. And with that being said, cheers. I'll catch you in the next video.